Mm. Yeah, William wrote me. The sound that couldn't be heard.
Good morning to everybody. Welcome to this webinar. The topic is something which is of, I think, strategic importance. Even if we now think about the euro, you might think more about the weakening exchange rates, the inflation rate, the policy of the ECB. But if you think longer term, the question is, what kind of euro will we have in the future? And here, one answer is, it will, of course, be a digital euro. And this is the question we want to discuss today. You have already seen, scrolling down on the screen before you, some of the more detailed questions that we will discuss today. And I think we have an excellent panel. All of the panelists know more about payments, the euro, monetary policy than I do. And therefore, my role is just as a moderator to provide some questions. And when I look myself at this issue, digital euro, what could it help us? What problems could it help us to address? Why would it be useful, and so on? Then, after reading a lot of ECB publications, I get the impression that the ECB has identified a problem for itself, and it wants to create something, which is called the digital euro, which the ECB thinks it will help it solve that problem. And that, of course, in my mind then raises the question, but what will people on the street do? Will they actually want to use that digital euro? This is just the background for me. And who better to address this first than Johanna Schreck? She's a fintech expert in the payment system department of the Bank of England. part of the euro system, and therefore part of this big machinery, which in the end should deliver us this digital euro, about which we know for the time being very little. But perhaps, Joanna, you can enlighten us, especially in terms of the background which is driving your, when I say your, the Eurosystem's work on this big project. Joanna, the floor is yours for 5-6 minutes, and then we come to the other panelists. Thank you very much.
Thank you. So yeah, I'm part of the Eurosystem, but I must say I'm not part of the high-level task force or the decision-making bodies in the Digital Euro project, but it is the most pressing issue in our fintech team at the moment. So I'm quite well aware what's happening inside the project and in part of some work streams there. But yeah, to the headline of the topic today, are we ready for the digital euro? I must first say that the digital euro is not ready. That's what we are doing at the moment. So last year, July, the ECB Council made the decision to launch an investigation phase. And this basically means that if in the future the decision is to be made that we should launch a digital euro, we are now thinking of the design choices, kind of the practical issues within the designing of a CBDC, a digital euro in this case. So at the moment, we are not so much investigating whether or not to launch it, but if it was to be launched, how should it look like? And maybe you have heard some of these like design choices going forward. So we already know a bit what the use cases should be, what kind of distribution model there could be. Would there be maybe holding limits or remuneration and stuff like that? So there are these a lot of these open questions related to the practicalities and design choices and the privacy and should it be a legal tender or not? So these are the kind of questions we are at the moment thinking. And about the background, just now, I think during the summer, the ECB launched or published the key objectives that if the digital euro was to be launched, what are the key objectives it should meet? And indeed, this is of strategic importance. So the one key objective is that it should protect the strategic autonomy, our monetary sovereignty, and also make the payments market more efficient. So the competition side of the payments market. And then it should also preserve the role of central bank money as a monetary anchor of our monetary system. So maybe a bit theoretical one, that last one, but those are the kind of key objectives. And I think you really touched upon a good issue. So these are very much issues that the ECB cares about, but not so much what the consumer in the street, especially here in Finland. We're one of the most digitalized countries in the world. Among Nordics, we have a lot of digital payment methods that people are using. They don't really need another one. So I think this is a really good question, whether or not people would actually start using it in a country like Finland, where they already have mobile payment apps that are very much working in many use cases, and we love our card payment systems. And so it's, yeah, that's a good question. I think we should really think about that before launching a digital euro, and we are. Thanks.
Thank you very much. You have been extraordinarily short and clear. If I might take just 1 minute of reflection, when you said that now the Eurosystem is in the process of making design choices, if it were to be, that reminds me a bit of the Delors Committee, which was put together where the central bankers were asked now 30 years ago, how would they construct a monetary union if there was a decision to have a monetary union? They weren't asked whether they liked it or not, because they were basically like asking turkeys to vote for dinner, right? Because they would be out of their job, all of them except one, right? But it was a similar procedure. So just sorry, that as a reminiscence of my own time, you first ask people how they would do things if they had to be done, even if they don't like them. I think we can now come to our next speaker, Dr. Alexander Friedrich, who is a digital payment expert at the German Federal Ministry of Finance. And I think we know that a digital euro project would not or could not be done by the ECB alone. It needs to have the support both, I think, in terms of legislation and perhaps also some practical underpinnings by the governments. And Alexander, I think you are ideally placed to give us some background to that.
Yeah, sure. Thank you, Daniel. Hello to everyone. It's a pleasure being here on today's panel. The question whether we are ready for a digital euro or not is of utmost importance. It's of utmost importance because we're discussing with the euro the currency which we all share here in Europe, and whether and how we treat it in the future, whether we make a leap in terms of treating central bank liabilities and bringing that to every person, is something that may have or does have very large implications on society as a whole, which requires intense discussions, which requires intense reflections and a strong attitude also towards risks that may come along with such an approach. And at the same time, I'm convinced, and here I'm speaking for myself, not for the ministry here, but I'm convinced that the success of any such project would ultimately depend on its acceptance by the people, by our societies, and by the democratic legitimacy which it carries. And I think there are many aspects which you have raised, Johanna, which address those points which I'm now bringing forward. The use cases, the contexts in which a digital euro may be made use of within the European Union falls on distinct uses and preferences we have in our different societies throughout the different countries. The use of cash is distinct one country to the other. The use of electronic payments is distinct from one country to the other. The sensitivity and the understanding of or apprehension towards financial privacy, data protection in some countries is distinct than it is from the others. Creating a digital euro would have to take into account all those different preferences and uses. And that is why it is so important to discuss about the digital euro, how it would have to look like, how it could be used, what are its features. And I'm convinced that the current process which the European system of central banks is developing, which it is enhancing, is very, very important for the whole of Europe. Yeah, that's that. I'm looking forward to the discussion on the more precise aspects and details of digital euro, what it would entail for our societies, which aspects of it, which features could carry it forward, and would ultimately make us expect that it could become a success.
rookie mistake. I have muted myself. Thank you very much. You seem also to be speaking as if the digital euro was not something quite clear what it would be. So we are really here at the very early design choices. And perhaps somebody who can give us a more concrete idea of how a digital euro would work and how it would fit into the payments landscape, and therefore how it would be used, is Paul Thomalla. He's head of industry and regulatory affairs at Finastra, and therefore an industry insider with a decades-long experience, who has seen, I think, a lot of digitalization, and therefore for whom the question might arise, what's new about this wave of digitalization? But Paul, the floor is yours.
Thank you, Daniel. Look, I mean, I think it's great to be here, and I think it's the topic of the moment and probably the topic of the next 10 years. I will try and look at things from a payments point of view, because I think that, you know, there are many aspects of the digital euro, but I'll try and stick to the payments piece. And I have to tell you, I've changed my mind. I spoke with Carol not so long ago, and we were, you know, in different places, shall we say. I now have changed my mind, and I think the truth of the matter is it is inevitable. And let me try and explain why, because I think it's quite a journey that you need to, well, I needed to go on. If you think about payments, the truth of payments is that it's just the exchange of value for a service or a good. There's nothing much else to it. Unfortunately, we've made it into a thing of its own right. We've made payments an industry, but it's just plumbing. It's what you do to do something else. You know, you want the cup of coffee, you don't necessarily want to make the payment. And I think the truth of the matter is, if you asked people in the street, you know, how does my card work, or how does any payment methodology work, they couldn't tell you. They probably think there's somebody in, you know, Gringotts that moves gold from one corner to another corner. And so they don't know the back end of how this stuff works. So to a degree, it's a little bit irrelevant what's in the back end from a payment point of view. However, I think it's quite important to go back to history. You know, 1,000 years BC, we had coins. In 1659, we had checks. In 1961, I think the first card was used, and in 1968, we had the first ACH house. But we still have them. And we have immediate payments, and we have all sorts of things. But in fact, they're just methodologies to move money around so that you can get the good or the service that you require. And what we have now is a plethora of intermediaries that sit in between a consumer or a government or a bank and do the processing. And if you just look at the sheer complexity of those intermediaries and the friction that they bring, it is astronomically large. We'll never get to a digital world with having all these methodologies in place. But it's also expensive, very expensive. In some places, you can clearly see that the cost of sale of some of the methodologies is actually 3% plus.
Why that?
Well, if you look at the cards industry, you know, the actual consumer is roughly embedded in the price of their cup of coffee, is roughly paying 3% cost of sale for that cup of coffee just to be able to use the card. And you can talk about cash, and cash what costs roughly about 7%. That's kind of embedded in the price of things. So if we were to try and move forward into this digital age, we can't really be using our methodologies that were done, you know, in the 1659 or, you know, 50, 60 years ago. We need to have a more digital way of doing it. But that causes a lot of new friction and a lot of changes, and the intermediaries would have to change, but we would get to a digital world. And in our journey to try and get to open finance, we need open banking. To get to open banking, we need to have open payments. And we need to start to think about what that means. And I think the digital euro is the opportunity to reset the intermediaries and the friction and move into a digital world. The journey will be quite complicated. There'll be a lot of people that are making money out of being an intermediary. But the truth of the matter is, a lot of these use cases that we have for checks were once the best practice. Now they're probably not. So are we ready? I'm not sure that we are ready, but I think we need to get ourselves ready pretty quick.
Thanks a lot. The word that struck me was inevitable, but you didn't say what the timeline was. 1,000 years or 1,000 seconds?
I feel that it will be sooner than we think, but so I think we'll have something operational within the next 2 to 3 years. But if it's just an additional rail and it doesn't go on to be the rail, then I think we'll have just added more friction. So I think it's about the use cases for sure, but I think it's probably closer than we would think. And then I think it would take over. I think in 10 years, it'll be the rail. That would be my prediction.
Thanks a lot. That's quite clear. Let me also just take care of my duties as a moderator. We have a chat function. We already actually have a first question, which was, a Q&R button. There was a first question there, very basic, to which of course, we will come back over and over again. And that was, can you please elaborate what is the key problem that the digital euro is supposed to solve? Maybe we come back to that question in a second. I just want to say that after the last speaker, of course, feel free to raise your hand or put your question in the chat, and I will try to then bring these questions to everybody. But before we do that, I would like to introduce our last panelist, Professor Larissa Yavabaya. She is Deputy Head of the Center for Digital Finance at Southampton Business School. And she is somebody who has thought and written about things digital for a long time. And maybe she will agree with Paul that the digital euro is inevitable. I don't know whether she agrees with the timeline, but Larissa, the floor is yours for the time being.
Well, thank you so much. Good morning, everyone. It is a pleasure to be here. First of all, of course, I agree with all the panelists, and I think there are good arguments being made. I've been researching cryptocurrency for about 5 years now, and pretty much was looking on the volatility of the cryptocurrency and the main motivations among investors, why they're so interested in investing in cryptocurrency, and what are actually these use cases. Therefore, if we can say like 1 year ago or so, I was extremely pro central bank digital currency. I really thought that, well, genie get out of the bottle. So the world is going DeFi, that it's transforming how we're doing businesses, the banking sector getting transformed, etc. However, now, at the moment, if you ask me a question, are we ready for digital euro right now, here and now? I would probably say no. Why? Because I think there is such a high level of mistrust in cryptocurrency in general, just among the society. Okay, the majority of cryptocurrency lovers, they're really proponents of Bitcoin, which we can call traditional proof of work system or for peer-to-peer transaction. However, this system is extremely energy consuming, extremely inefficient. Therefore, whatever technology will be behind digital euro, we can probably convincingly say that it will not be proof of work, considering our green agenda and considering that we need something more sustainable, something more scalable here to use. Otherwise, it will be like widely criticized that we are using such energy consuming algorithm. After thinking, okay, stable coins potentially could be a great option for central bank digital currency. Yes, to have like a patch to actual euro, exchange it, to have some sort of digital decentralized alternative to the euro that we have right now. However, as you may heard about the Terra Luna collapse, of course, it was not asset-backed stable coin, but it was algorithmic stable coin. But still, I think these collapse of Terra Luna actually caused panic on the cryptocurrency markets, and even the word stable coin, and this prefix of stable already considered, as a fraud, because cryptocurrency users basically saw that, well, we invested in stable coin, but at the end lost all our money and it was not stable. Therefore, I think now we can see that even like this Terra Luna collapse caused massive spillover effect to other cryptocurrencies, including the market leader Bitcoin. It lost 60% of its value from November 2021. So you see how volatile are these digital currency, and how we can assume that any consumers right now, if the digital euro will be introduced as a form of stable coin, will be suddenly, trust to use this currency and will trust to, for example, get a salary in digital euros instead of actual euros. I think there are lots of questions around it. I think just simply society is not yet ready. There is no worldwide, there is no even one single case of successful digital currency that should be used as a currency. To me, knowing that all the financial asset ecosystem, for me, these assets, digital assets, so far play a role as a speculative asset, and therefore they need to be regulated. Regulation is still not here either. We can't see any approach how to efficiently regulate digital assets, whether to treat them as a commodities or should we treat them as equities, or how to regulate it. I think there are, unless we will address all these questions to ensure that overall digital asset ecosystem is more stable, less volatile, that financial markets already immune from such a high fluctuation, that social media will not affect the prices of digital assets as we witnessed it before. I mean, which trust if after one tweet of Elon Musk, cryptocurrency can raise in price on, 600% or drop in price in the opposite direction. So I think all these questions, and in general lack of financial literacy among society, and this risk aversion that we have in right now, I think will be one of the main obstacles why digital euro potentially, if it will be introduced right now, will not be as successful as it could be. It's really hard to predict a timeline and a time frame when we should do it, but I think there is a long list of regulatory, legal, environmental concerns that should be addressed before we legitimizing any cryptocurrency or any digital asset and making it a legal tender. I think this is my pitch for today. Any questions, welcome.
Thanks a lot. Let me start immediately with something you seem to imply initially, which is that somehow the digital currency would be, let me say, quote unquote, based on crypto technologies, right? So either proof of work could be proof of stake. As far as I know, the plans, even the hypothetical plans, right, discussed at the Euro system, would be based on a normal, let's say, centralized ledger, not a distributed ledger. There would be, I think it would be called digital euro, but it would be basically run on the accounts of either a central bank or some financial intermediary without using any of the distributed ledger technologies. And perhaps let me just get a very brief confirmation from that from Joanna and maybe from Paul. Joanna, was my recollection correct?
I agree. I think there are still some layers that there is up in the air, whether it could be decentralized, or let's say this, if this DLT technology could be utilized in some parts, but it definitely will not be a cryptocurrency. It's euro, it's our currency. I would say it's the concept of digital euro is closer to digital cash than cryptocurrency. So if you would have our central bank issue cash, it's centralized, it's public money, it's not privately issued decentralized cryptocurrency. It's something that we are trying to maybe think if cash could be issued in digital form, it will be very much centralized in a sense that it will be issued by the Euro system, ECB, not private entities where you can speculate. And I would say this, that one of the also requirements will be that it will be like sustainable. So definitely not proof of work or any other solution that would make it unsustainable in terms of environmental concerns.
In other words, the ECB has its work cut out to say that this is not a cryptocurrency. This is not a cryptocurrency, perhaps 3 times. And we don't need any miners, any validators, whoever. This is our money and we take care of it. Paul, this discussion about distributed ledger technologies in payments seems to be very far, right, from reality.
I think so. I think, we have a very excited state about everything to do with blockchain, and it's the answer. Now, what is the question? And it's, modern technology, and I think that it will probably have a role to play. But I think if we wait until we have the answer to all of those problems, we'll miss the downstream problems. And I think Joanna mentioned it right at the very beginning. It's about the use cases and getting involved with the individual citizens and or the stakeholders. And the truth of the matter is the stakeholders don't understand what the difference is between gold, euro, a digital euro. I mean, they have no concept of what it is anymore, because actually, unless you use, unless you look at the banknote and you read it and see what it says, which we don't, then actually it's just another token. And I use that word knowing that people will think, oh, you mean tokenization? But it is another methodology of tokenizing things so that we don't have to move the gold in vaults somewhere. So there is a dissociation from what actually happens at the back end of the settlement clearing layers and where it actually resides and what people actually care about. They care about buying their coffee or paying their bills. They don't care about whether it's on blockchain or it's a crypto or it's a whatever. It's more the tokenization of it. And I think that's probably the use case scenario that we have to think through. Because otherwise, as you've said, Daniel, people might just go, wait, this just sounds all a bit crazy. And, people disappear in this crypto world, don't they, and steal all the money. Is that the same thing? No. If this is the digital euro backed by the ECB, it's a different thing altogether. And we have to simplify things, I think, to make it easier.
I saw a hand briefly by Larissa. You want to come back on this one?
To clarify in terms of different types of blockchains for our audience. Yes, of course, we have proof of work with this purely decentralized system. We have proof of stake when we have several powerful nodes to validate the transaction. And probably what Joanna suggested, that potential for digital euro, it will be something similar to proof of authority when we have one central node, let's say central bank, that will still validate all the transaction on the chain. However, if central banks and behind the digital euros, there will be no blockchain at all, there will be no distributed ledger, then what the point to call it even digital euro? Call it like we already have banking money. I mean, how exactly this will be different? To me, I think if they're already saying that it's central bank digital currency, I think it should be the system underneath and the ledgers underneath, that it has better security, that it should improve transparency, that it should actually offer some additional features apart from the electronic money that we have already everywhere. So I think these are probably the most confusing part among all cryptocurrency users, investors, or anyone who is interested in digital money. Yeah, we don't need to call it cryptocurrency. We can call it digital asset. We can call it token. But again, what is the appeal to use then digital euro if there is no features and no use of blockchain and no innovation in a way, just different way how we can, instead of issuing banknote, issuing just digital banknotes. So I think here we need to really think what are the added value of it, and probably this is one of the questions from the audience as well, which goals, if it's not cryptocurrency, if it's not decentralized, if it's pure private, but it's not a blockchain as well, what are the goals of this? I think it's really a solid question. Okay, I hope my panelists also, sorry, I saw one hand fleetingly, but I couldn't catch it. Joanna, can I just ask you to wait for a second? I hope some of you can enough to multitasking to look at some of the questions. Some people have referred to the speech by the ECB today at the European Parliament, where it was pointed out that the digital euro would be basically a substitute for cash, right? Probably also with limitations on the amount you could use. So I think it would, to Larissa's point, it would definitely not be crypto, quote unquote. It's the central bank which wants to keep it very closely and have it to be the only one which has authority to issue it and control all details. But here, okay, I come back to the member, and then I wanted to come back also to Alexander, because there was another question regarding especially to the case of Germany and Austria, where cash is very much used. So that speaks to what so can I first ask Joanna, come back briefly on that, and then I wanted to give the floor to Alexander on the Germanic cash question. Joanna.
Yeah, so this is what I understand as well as Panetta has today spoke. I haven't heard or wrote the speech, but it seems like in line with my thoughts and the thoughts I've had from the project. And I would just like to comment on Larissa's point on the blockchain technology, that I think the stage we are now in the project, we shouldn't be driven by a technology that has a lot of hype at the moment. It's not the end goal to use some technology. We have other goals, and then we think, what is the technology and what is the design of this digital euro we need to make to meet these goals? But the goal shouldn't be, let's use blockchain technology. It's not a future, it's a technology, in my opinion.
Thank you. So, Alexander, coming back to this, what ECB representative said this morning, that the digital euro should be a substitute for digital cash, right? And since you are sitting in a cash-rich country or cash-intensive country, maybe that's one aspect you want to discuss, and of course, the others which we have discussed earlier.
Yeah, sure. Well, in this context, I think numerous aspects are of utmost importance. The first one being that the term of substitution in this context is certainly nothing I would understand the ECB would ultimately aim at here. It is a complement to cash in that a digital euro would be another form of paying with central bank money that would complement the ways we already have in the European Union to pay with central bank money, which is cash. And in his speech this morning, I understood Panetta above all to draw a comparison between the practical use and the way people could eventually make use of a digital euro and the way it would be designed. And that is an entirely different question, because the design and the parallel between a digital euro and euro cash is something that would ultimately define also how our societies could interact with it. meaning that cash carries certain characteristics which make it unique from other forms and media of payment. Above all, question of financial privacy. And that is also an aspect that has been raised this morning in a speech, if I'm not mistaken. I think drawing the line between euro cash and digital euro along those criteria and those precise features is something that may bring the discussion forward, and that is something that also contributes to expectations towards a digital euro, in particular in societies that are very much cash driven. That said, we have been discussing questions of other features of a digital euro. Its possible integration into programmable contexts. That is certainly something that would bring added value. Yes. At the same time, a digital euro is not the only way to make use of payments in programmable contexts. And there, I think it is very, very important to develop the relative importance of a digital euro and its use cases, in particular in those contexts where programmable features become key. There are many programmable solutions in the private market in the sector which we can see, which are being developed every day, to see how could a digital euro fall into this ecosystem of digital payments is something that is very, very important to discuss and to see how that would ultimately work. There are ways to achieve it in a technical way. There has been a lot of discussion of wholesale digital euro, which is something which is currently not pursued by the European system of central banks in an intensity that it does pursue a retail digital euro. So there are many different aspects to take into consideration when we look at the features of a digital euro and the use cases and the contexts in which it may be used. One of them being a cash-like use, where ultimately its features would have to be very similar to cash. And then there are other use cases where a digital euro could be used, where its features would have to be designed in a way that it would ultimately also allow those use cases. Yeah. And I think that brings us back to the question which you raised at the very beginning, Daniel, that the ECB identified a problem on the solution to which it works. The whole question of this problem and what it is ultimately meant to solve, I would argue, falls down to would people actually use a digital euro? Yeah, and then when you distribute, when you unfold this argument, you go through all those different aspects and categories that do become relevant.
Thank you. We have about 15 minutes left, so let me perhaps narrow down the discussion a bit. And here, I will start from my own understanding what is driving the ECB. Based on their speeches, also discussions with them. Basically, the problem they have identified is the following. We, central bank, issue central bank money to the person on the street, to everybody who wants to have it, in the form of cash, banknotes, right? On which we basically write, we pay you €1. And we notice that this cash is used less and less for transactions. And I think Paul can confirm that people are using less cash in everyday transactions. And therefore, the argument of the ECB is this means that people have less frequently the experience that they can exchange their central bank money, meaning cash, into bank accounts. And since all the rest of the economy, 95% works on basically bank account balances, even credit cards in the end, right? And you do your transfers and everybody. So it is very important to have this one-to-one link between cash and bank accounts. But if people, as I said, don't do the everyday transactions in cash, they don't have this experience, and that might weaken the link. So my interpretation, and let's stick with that, of the problem the ECB has identified. And therefore, what is the solution? Let's give people something which is also central bank money, which they will use more often in transactions, and therefore re-establish the link between central bank money and bank accounts in everyday experience. And by the way, if we do that for money laundering combating, we have to have some limitations on the use. Because otherwise, I, an individual, could have an ECB digital euro to 1 trillion, right? And that would be then, since it, so there's a technical problem here, but they think they can deal with it. So let's take this as given, that this will be the project they're working on. And that all the transactions will be either on one centralized ECB ledger, and the rest, and that will be therefore basically a centralized ledger. Okay, so maybe I come back to Paul and then also the others. Given that aim, right? What can or should the ECB do to make sure that actually people will use this digital euro as a substitute for cash, basically for small scale everyday transactions?
I think it's the use of it being the digital euro and it being in the background as the euro. It's not a new thing. It's not a new stable coin. It's not a new Bitcoin. It is the euro backed by the ECB. That is the cornerstone of its validation. And then you get, I believe, to the use cases. And if I use an iPhone. If I use my iPhone to pay things, do I know that that's actually cash or not cash? Well, I think that it's something like 50% of all the card transactions are actually using cards across the whole of Europe. It's about that number. Now, obviously, some countries a lot more, some countries a lot less. But those use cases for relatively small amounts of transactions, less than 5,000 euros is about 95% of all the transactions that happen in the Eurozone. So it would then look at all the use cases that go from buying a cup of coffee to paying bills, paying a supplier. Those use cases are the ones that I think need to be worked through. When I'm buying a company for 50 billion euros or something, that's a special use case, and it's not really part of this discussion. But the other consumer SME use cases, they're the ones that I think we need to work through and make sure that it's completely recognized as the digital euro and not some somewhat eccentric American idea. Otherwise we'll get lost. And I think it also plays into the fact that you can then start to control and manage all the regulation of all the payment types within the Eurozone, which I think is a very important thing to do.
Can't resist. If you can give me very briefly, what would you do if you were the ECB to make sure that people use the digital euro? Paul.
So is that to me, Daniel? Yeah. I think the most important thing that they need to do is to have it extraordinarily clear that this is the digital euro. It is part of the central bank methodology. It's not some crazy thing. And then I think they do need to build in the use case that goes to the mass and shows that it could work, because that's how people will become comfortable with it. There were times, not in the distant past, where people didn't like contactless cards. People didn't like cards. People wanted to sign check. All these things have passed, and I think we need to introduce it to make people to be comfortable and make it extraordinarily clear where the euro, I was going to say where the buck stops, but that's a bad analogy, but where the euro stops. And I think that's probably the heart of the confidence, use cases and it being central.
Excellent. There was a question how that will relate to the privately regulated money, and that I will defer to Larissa later. But perhaps first I wanted to come back to Joanna and on something which Paul said earlier. You said if the ECB just offers digital euro as another electronic means of payment, that would just add to the plethora, I think you said, of the existing, and would just increase basically transaction costs for everybody. So it should become basically the means of payment, substituting others. And now, if I read the ECB publication, they say 20 times, we do not want the digital euro to substitute all other means of payment. We want is just to coexist, to provide some competition. And that seems to be the opposite of what Paul was asking for. Joanna, am I interpreting ECB pronouncement there correctly? And what do you say to Paul's argument that if you really want to have it to be useful, you've got to go the whole way?
Yeah, I think you understand it correctly, if I have understood it correctly, which I think I have. But I don't know if it's that much of a disagreement with Paul's views, maybe a bit, but I think Paul is looking a lot more forward, like you said. The digital euro is, I think the estimate now is 4 to 5 years if it was to be launched. And Paul is looking like 10 to 20 years. And I don't know if it needs to be the means of payment, but maybe the idea is that now we have these two plumbing companies here in Europe. If we offer a third one, maybe the level playing field will it will be more of a level playing field for other companies to come through as well. The competition is a big aspect, I think, in this discussion. And I saw a question there also, like what is the key problem that ECB is trying to solve? I think you already described some of it, but I think this is one part of the issue is that we have our digital payments are concentrated on these foreign companies, card schemes, very heavily. We are reliant on them, and it might be healthy to have another alternative. And then once we have that alternative, what it will look like in 10 years, I don't know. But for now, maybe the punchline is to have just an alternative there to make the competition a bit healthier.
I must say, I detect a little bit of a Fortress Europe thinking here. We cannot have two foreign companies, although they are from a very friendly country. So if you think about friendshoring, this would be it. But let's perhaps come back to that question if we have time. Just in a minute, I wanted to ask Paul then later, what does it actually mean that Visa and MasterCard, that's what's meant, right? To be open about it. What is actually American about them, the way they work in Europe? But first, Larissa, because your comment started already with crypto, I think you said that if it's not somehow a crypto technology, what's new about it? What is it worth? And then I refer to the question which I would like now you to address. Do you foresee any relationship between these privately issued cryptocurrency, especially the stable coins, and the digital euro?
Because I think everything, when you're using even a word digital, it's automatically leading you to the space of digital asset. Yeah, so if it will be called digital euros, regardless, it will be considered and scrutinized from the perspective of digital currency. And crypto, it's not necessarily something weird. Blockchain is not necessarily something weird. Blockchain, it's simply a ledger. It's simply the system to record the transaction, record the information. And I don't know which alternative technology digital euro will use. We haven't named any technological specification, whether they will use Excel, I don't know, to record the transaction, whether it will be secure, or they will use a blockchain or different type of it. I mean, there are I think these are the main questions now that before introduction of digital euros needs to be addressed. As we had a question in the chat, where digital euros will be stored, whether it will be on the credit card, whether it will be in the wallet, which will be very similar to the cryptocurrency already. If we will use mobile payments, we will use wallets or any other private payment system that we have right now. So I think these technological aspects are the most burning here, because in the cryptocurrency community, if you're interested, there are lots of skepticism about central bank digital currency in general, that some of the Bitcoin lovers, for example, thinking that introduction payments like digital euro or any other central bank digital currencies will harm the sense of freedom and decentralization that now the community is aspiring, and it's simply just another way for the government to control the financial flows within the Eurozone, for example. So I think there will be lots of comments like this, that lots of critique in this way. And yeah, I think it will be very, very strong linkages between digital euro and other digital assets that are available, because potentially from the users of cryptocurrency, digital currencies, introduction of digital euro, something that will be purely digital, purely digital, might create a loophole how the money can be transmitted from the decentralized world, from DeFi, towards to actual currency like digital euros that can be cashed anywhere in the European Union. Therefore, questions of money laundering, criminal usage, security have to be addressed by the government, and to make it crystal clear how digital euro will be integrated, correlated with any other digital assets.
Thanks. Yeah, that is, I think, a task for the ECB, which I think it is trying to do with various speeches, but without much success. And we have been discussing a lot of the questions which have been put in the Q&R space. I have not seen anybody else raising his hand to make his or her hand to make a question orally. And in the remaining 2 minutes, perhaps we will continue to address some of the questions which we have in the whatever called the chat box. And one question was whether the digital euro would actually substitute or somehow affect the payment systems, local payment systems, which have already sprung up in different countries. In Sweden, I see in the question in Spain as well. Would the digital euro somehow be in competition with them? Paul, you might know more than us about these existing systems, some of which have been locally very successful, having a very high penetration ratio in their respective home market, but being totally unknown outside their home country. So what is your view of the link between those systems and the digital euro?
I think we've got to sometimes differentiate between brand names and what they're actually doing. I think sometimes, we get a little bit lost. Ideal is another one in Holland, and what are we trying to do? We're trying to buy a service or a good. The brand name that goes on top of that is kind of a little bit irrelevant. Now, they have come from a place where there was an opportunity. In 2 years' time, there'll be another place and another opportunity, and they'll be replaced. As cards replaced checks. That's an ongoing process. And we can't just say, oh, stop, we don't want to do this because it won't work. We never would have introduced the euro if we believed that principle. So I think we have to say it is likely to affect them. But if the actual consumers don't think that it's better, then so be it. But I think that once you get into it, you'll see the costs are astronomical when you outplay them across the whole of the Eurozone. You don't see that when you just look at one specific region.
Of course, all politics is local, right? And the profits in these systems and the benefits, right, are local. The Swedes are quite happy with their Swish, and the Spaniards are with their system. So there might be some resistance, but I come back to what you said at the beginning. If one looks at the longer sweep of time, then perhaps things will even out. Perhaps I will give the last word to Joanna. And since you're already running over time, the brief question I would like to ask her, although of course she doesn't have a crystal ball, will we have a digital euro in 2 years? And in 10 years, will it be our main means of payment?
The first question was, will we have it in 2 years? My crystal ball says no.
not even in 10 years?
In 10 years, I think if we ever have a digital euro, we will have it in 10 years. But I don't know if we will ever have it.
Okay, as a voice coming from one of the most advanced, most digitalized countries in Europe, I think we can conclude with this, note of skepticism. And it might be that we'll have to have another webinar in a year or so just to see where the ECB is still with its preparations of what they would do if, and whether we are closer to a final decision point then. Many thanks to the panelists, and especially many thanks to the very active audience. We had so many questions that we couldn't address all of them, but I think they contributed to our discussion, and maybe we contributed a little bit clarifying the issues. Thank you very much and have a nice day. Bye-bye.